in perpetuity formula, YP equal to 1 by cap rate. That means 1 by 10%. 1 by 0.1, it will be 10 rupees. So the value of property yes purchase is 10 rupees. The option C is correct. Okay. Which principle ensures that insured does not profit? Indemnity. Contribution, subrogation, utmost good faith. It is indemnity. The principle of indemnity is actually a fundamental concept in insurance, particularly for property, liability, and other non-life insurances. It states that the purpose of insurance is to restore the insured to same financial position they were in immediately before the loss, no better or no worse. The insured should be compensated for the actual amount of the loss, but should not be allowed to make any profit from the insurance claim. Contribution means this applies when multiple insurance policies cover the same risk. It ensures that the total payout from all insurers does not exceed the actual loss. So it supports the principle of indemnity, but it is not the main principle itself. Okay. The subrogation means this allows the insurer, after compensating the insured, it will step into the insured legal rights. It will step into the insured legal rights. Which legal rights? To recover the loss from the third party who caused the damage. This also prevents the insured from being compensated twice, by the insurer and by the third party also, thus supporting the indemnity. Okay, so it is also not direct indemnity. Utmost good faith means this requires both insurer and insured to disclose all material facts honestly before the policy. So it is about pre-contract honesty. The correct option is indemnity. So here, what is a third party insurance? Just for understanding, I am telling, third party insurance is a mandatory type of motor insurance that provides financial and legal protection to the policyholder against the damages or injuries caused to another person or their property in an accident involving the insured vehicle. Okay, if A is having a vehicle, he insured the vehicle, he is taken third party insurance. So he is the first party. First party is the insured individual, that means A, who purchases the insurance policy. So A is the first party, okay, who has taken the insurance. The A is called as insured, INSURED, insured. Okay, remember that. Second party is the insurance company providing the coverage, that means insurer. He is the insurer. Okay, like Bajaj Finance or something like that. Third party, and other person or their property that suffers the damage or injury due to the actions of the first party's insured vehicle. Okay, the insured individual's vehicle, the vehicle is having third party insurance, like that. So the third party is the other person or their property that suffers the damage because of the actions of the first party. Annual income of 2 lakhs for 10 years at 8% growth rate. What is the approximate annuity factor? Annuity factor is equal to 1 minus 1 plus r whole power minus n divided by r, means Sorry, it is not 10. It is 0.08. So the answer would be 6.7. Okay, 6.71 rupees. What is this annuity factor? What does this mean? We can calculate the present value of the property PV like this. Remember this formula. Okay, if he asks the present value of the property, annuity factor is nothing but years purchase. We discussed about this. It is the worth of the property considering the future regular consistent annual income at the rate of return of 8% upon the investment today. So this present value is the years purchase. So how much investment I have to put right now? Suppose I want to purchase a property which is generating an income of 2 lakhs for 10 years at 8% rate of return. So what will be the present worth of property? So the annuity factor is this much, right? This is the annuity factor I got. That into NOI, net operating income, 2 lakhs into annuity factor, 6.71. So the answer will be $13,42,000 is the worth of property, PV. It is not asked in the question, but I am discussing it. Okay. Elastic demand is when elasticity is greater than 1. Easement upper tenant requires dominant plus servient tenant, only dominant tenant, only servient tenant, no land required, dominant plus servient tenant. Here upper tenant means something that is attached or belongs to the ownership or primary property. Okay, something that is passes with the ownership property. So for that both tenements are required, dominance plus servient. Okay, the standard deviation measures variation. Who appoints registered valuer under Companies Act? Board of Directors. Scrap value means value of materials after demolition, market value of land, reproduction cost, rent receivable. The first one, value of materials after demolition. Ethics. Conflict of interest means valuer involved in transaction, valuer maintenance independence, client disclosure is full, market data is transparent. Valuer involved in transaction. Promoter must deposit 70% of funds saved from allottees in which account? Own account, escrow account, FD account, builder association account. The correct answer would be escrow account. So sinking factor at 6% for 10 years is approximately. So what is the value of SFF? Sinking factor equal to or by 1 plus r whole power n minus 1. That means 0.06 divided by 1 plus 0.06 whole power n means 10 years minus 1. This will come as 0.70758. What is this value? What is the concept behind it? Suppose I want to make 1 rupee in 10 years. Say, for example, I have span of 10 years. So first year, second year, third year, and so on, 10 years. So I started today on first year, and after reaching 10 years, I should get an amount of 1 rupee in my account. So how much I have to deposit every year annually for 10 years at the rate of interest 6%. That is sinking fund factor. So here for getting 1 rupee after 10 years, I have to deposit 0.0758 rupees every year in the bank. Then after that I will get 71 rupee in my account. Okay. If you say it is for 10 years, it will become 0.75, right? That means 75 NP. 75 paisa I have to deposit for getting 1 rupee in my account after 10 years. For better understanding, if I have to make 1 lakh after 10 years at the rate of 6% interest, I have to deposit how much? That is what SFF comes into picture. SFF into sinking fund factor into target amount. So that means SFF has come as 0 at 6% interest, right? We got, so SFF as we got 0.0758 into target amount is 1 lakh, right? Then how much it will be? If you calculate 0.0758 into 1 lakh, that means 7,580 rupees. What is that 7,580 rupees? I have to deposit 7,580 rupees in the account every year annually without any break. Okay. So after 10 years, I will get an amount of 10 lakhs. But I deposit my amount only 75,000 for 10 years. I will deposit only how much I will deposit? 75,800 rupees I deposit. But remaining 24,000 odd is and compound interest I got. Okay. For successive payments, annual payments. So that is what sinking fund factor. Here, so here in the option is not there, but the options given are wrong. We can correct it. So this is the correct answer. Okay. A lease pays 1,50,000 per month for 5 years. Market rent is 2 lakhs. Cap rate is 10%. What is the leasehold interest value? 18 lakhs, 24 lakhs, 30 lakhs, 36 lakhs. The lease pays 1,50,000 per month for 5 years. Market rent is 2 lakhs. Cap rate is 10%. What is leasehold interest value? There's a formula. Value or interest. Okay. Value or interest is equal to annuity factor into NY. Okay. This annuity factor comes as 1 minus 1 plus R whole power minus n R. This will come as 1 minus 1.1 by 0.1 whole power minus 5. So after calculating this, we'll get okay. This is the annuity factor. So we have to calculate interest today. It means value today. So here the annuity factor is 3.79 rupees. That means it is the worth of the property based on the net profit, net operating income or net profit. Okay. Here we have to understand net operating income as NOI as net profit. So considering the future net profits of 5 years, every year for annual net profit of some amount for 5 years, we have to calculate the present value of the property. So by benefiting the every annual return of net profit of some amount, we have to calculate the present worth of the property. So that is called as ES purchase also. Okay, the ES purchase or annuity factor. What is 3.79 rupees here? This 3.79 rupees is per every year. This is the property value. This is the property value of 3.79 rupees today. Okay, for getting what? 1 rupee every year for 5 years. Okay, this 3.79 means I will get 1 rupee per year. Okay, like that how many years? 5 years. So if I say I want to give this property for lease to you, okay, you are interested to take this property to lease. I am the lessor, you are lessee. As a lessee, you want to calculate the value of the property today. So what is the return on this property? This property is generating income of 1 rupee per year. For 5 years it will generate the income. 5 years, sorry. So for 5 years it will generate the income. So I have to make the value of the property today. So every year it will generate 1 rupee per year, and it will be for the limited period of 5 years only. Okay. So what is the value of the property today? That means I will get 1 minus, that is annuity factor, the present value factor, a year's purchase factor, or annuity factor. Three are same, okay? Don't get confused. For getting 1 rupee every year is this formula, okay? Annuity factor is equal to this formula, 1 minus 1 plus r whole power minus 10 by r. After calculating this, we got 3.79 rupees. This 3.79 rupees is how much? What is this 3.79 rupees? This is the value of the lessee, interest of the lessee. So you are the lessee, I am the lessor, say. You want to take it for lease. So the interest of the value or worth, lessee's interest, okay, leasehold interest. It is not freehold interest, it is leasehold interest. The leasehold interest is 3.79 rupees. Okay, for how much annual income? For 1 rupee annual income. But how much annual income means annual net profit. What is the net profit in the question? If I multiply this with 1 rupee, I will get the actual leasehold interest, right? So the lessee pays 1,50,000 to the lessor, say. The market rent is 2 lakhs. So what is the profit? Profit is getting net profit 2 lakhs minus 1.5 lakhs, right? Get the profit. There is a party A, he is lessor. There is a party B, he is lessee. So lessor is having the property own. He is a freeholder. So B is the lessee, taken property for 1,50,000. But there is a market of 2 lakhs. The party B knows that. Immediately the lessee did one thing. He has given sublease to the C for 2 lakhs. So now how much net profit is getting? After every deduction and everything, net profit is getting is 1 lakh 52 lakhs 52 lakhs minus 1,50,000. It will be 50 lakhs 50,000, sorry, 50,000 per month. Okay, so 50,000 per month is the, sorry if I say said for per year, it is 50,000 per month. He will get the net profit. So how much it will be for a year? 6 lakhs. 6 lakhs per year is the net profit. So if we multiply this 6 lakhs with the factor we got, which factor? Annuity factor. We'll get the lessee's interest. So 6 lakhs into 3.79. How much? 22.74 lakhs. So there is no any correct exact value. So approximately this will come to say 24 lakhs. Okay. So understand the concept rather than just calculation. Okay. So years purchase by P at 10% perpetuity equals to, what is this years purchase means? Years purchase is actually a factor. Okay, it is a factor. What factor? I will tell you. It is an annuity factor. It is an annuity factor. See, there are many common words like this: annuity factor. Sometimes it is called as present value. Sometimes it is called as years purchase or annuity factor. Okay. So what is the concept behind it? there is a lesser A, there is a lessee B. Okay, A is the lesser, B is the lessee. A is having a property, beautiful property beside the road. So B asked A for taking lease of this property. Okay. So if this property is generating annual income of 1 rupee per year, say for example, okay, it is generating annual income of 1 rupee per year. So B asked A for lease period of 10 years. Okay. What is the income generating by this property? 1 rupee. So B asked it for lease. Okay. So for 10 years. Now B has taken for lease. So B has given this another party C for 2 rupees. Again for 10 years. This is sublease. Now there are 3 parties A, B, C. A has given B for 10 years. Again B immediately gave for C for 10 years. B is paying, C is paying to B 2 rupees per year. B is paying to the A 1 rupee per year. Okay, this is the concept. Now if we take the interest of A in this problem, if we take the interest of A, that means freehold interest, right? He is getting how much? 1 rupee per year. Say it is 1 rupee per year. For how many years? 10 years. Now, years purchase or annuity factor is a factor that means that is the value of the interest, that means freehold interest in this case for A. This is for case A. Okay, for A. Value of the freehold interest for A for getting annual rent of 1 rupee per year for 10 years. So, benefiting the future return of 1 rupee per year for 10 years, what would be the value of the interest to the freehold? Okay, what is the interest of the freehold means what is the worth for him because of that property. That is a year's purchase. So how much it will be? There is a formula for it. 1 minus 1 plus r whole power minus n to the power to the base of r. Okay, so 1 minus it will be 1 plus how much interest it will be? Say it is perpetuity he has given, but we have considered span. Okay, let us consider 10% interest only to the base how much for 10 years, right? Annually. So base of r means 0.1. So what would be the value for it? The value would be 6.144 rupees. So this is not rupees, it is, yeah, okay, rupees it will say. This means year's purchase will be, year's purchase is the factor will be 6.144 is the worth of the property today for getting annual interest, annual return of 1 rupees to the subjected property from the lessee B. Okay. Then imagine this is for coming to real picture. Okay. if the same property is generating 2 lakhs. So B is giving to the A 2 lakhs. Okay. So what is the interest of freehold interest of A? 2 lakhs into 6.144. That means the freehold interest will be how much? Calculate this. 2 lakhs into 6.144. That means 12 lakhs 28,800. Is the freehold interest value. But if there is no any fixed limit, then what will be the property value? 1 by capitalization rate by P will be. That means there is no any limit until this comes to freehold actually. So YP will be 1 by cap rate means 1 by 0.1 will be equal to 10. So 10 rupees is the year's purchase. So answer will be C. So we have calculated the tough one actually. If there is a certain time limitation or lease limitation like that, this is the procedure. There is no any such thing like time limitations and all. Simply you can calculate year's purchase by 1 by capitalization rate. That is what perpetuity. Perpetuity means until the life of the property. There is no any fixed time or limitation time for this. So for that you can directly calculate year's purchase. YP is equal to 1 by capitalization rate. That means he will get 10 rupees value of the property on today's date for getting 1 rupee regular income every year until the life of the property. That is what this concept means. But there is time limitation means this is the factor. Okay. We have to calculate year's purchase or annuity factor or present value factor with this interest, with this formula. Okay, we'll go deep into these such case studies in future. Okay. You must remember one formula that PV is equal to ES purchase into net profit or net operating income. Okay, this is the present value.